Health and wellness are huge topics. They are very powerful trends, and this ETF gives you exposure to it. First off, read this disclaimer carefully. We will look at this ETF, the Health and Wellness ETF, 71% from the 52-week lows, relatively close to the 52-week highs. I have actually created some portfolios within this realm, health and wellness. Okay, if we go here to Gateway, you can see that we have we do have the fitness portfolio 306% from the lows, a pretty big move there. If we go down here, we have the clean foods mega trend 161%. That's a pretty big move. Do we have any others that's really, I mean, you could argue that seafood is part of it, part of health and wellness, even though it's very specific. And those were basically those that give you, and also maybe bicycling. That's also kind of health and wellness-ish, 114%. Yeah, so we are seeing some outperformance here. But let's look at BFIT. Okay, so here is the seasonality. You can see that October is a bit of a more mediocre month. September a bit stronger, but we don't have that much data. If we go here, Global X, it seeks to harness the effects of the changing consumer lifestyles by investing in companies geared towards promoting physical activity and well-being. That's of course good. There's major health issues in the world. Let's first look at the charts. So here is all the data we have for BFIT. You can see here that it certainly has this cyclical nature. It did go down quite big during the lockdown, which is an issue. It does strongly suggest that health and wellness spending is highly discretionary, and hence when there's turmoil in the economy, people will be cutting back on it. We did peak up above here and make a new all-time high, but we're pulling back a bit now. Yeah, let's look at the daily data points. Let's load the moving averages. So here you can see this attempted breakout. I mean, very strong day here, but it was not on that much volume. I mean, there's been other volume, much bigger volume days. So this was, yeah, it doesn't count basically. Well, in some way it does count, but you always, when there's an abnormal move, you always need to look at the volume. Okay, were there like serious players pushing it? And the liquidity of this ETF is so limited that it's not like anyone can pull off a move like this, but a broader range of people can. So one of the first things I do like to see here is that it does react quite strongly to moving averages. Here it is hugging the blue 100 day before the sell-off. Here the 20 day is the support level. Here we're testing, double testing the 200 day moving average in red. So that's nice to see. It means that there is a reliability here between price action and the moving averages. When we look at the correlation here with the S&P 500, it is 97% on the daily data points. If we go here to the weeklies, it is 88. But basically, the S&P 500 and this ETF, they do move more or less together. The most recent rally here has been supported by an increase in the accumulation distribution line. So if we go way back here, you can see that there's been an overall gradual increase in volume. So that's good. So there is popularity, and there is more and more people and funds holding this ETF, and that's what we want to see, because especially when it comes to ETFs with limited liquidity, there's always the nagging question whether it will be taken off the market. Based on the most recent developments, that seems like a low probability. So let's explore it a bit further. Here you can see, we are eking out a bit of a year-to-date gain. Let's look here at ETF Database. So expense ratio 0.50%. If we go here to dividend and valuation, I mean, it's usually pretty ridiculous who they are, the ETFs they are compared to, like the car ETF here. This is online something, I guess. Online retail, yeah. So, but 36 PE, it is, stretched, but, given that, if we will look at some of these companies and then the PE will make a bit more sense. The dividend is very limited, 0.38%, so this is simply not a dividend trade. Let's go to holdings. So here you can see, there's quite a few of these, I guess, more volatile stocks here. You got some Lululemon, Herbalife, you got, Planet Fitness. Yeah, so it's a mixed bag. You also have Dexcom. Pretty sure they are the ones who make the diabetes medicine. Let's explore it a bit further. Here you can see that cyclicals, they constitute a very big part, 65%, which also explains how it is quite sensitive to changes in the economy. Looking more longer term at companies that are pro health and wellness, I do think that they will become increasingly more like consumer staples due to changing tax incentives and very beneficial regulations that will increasingly punish companies that are very detrimental to public health. That hasn't really happened yet, but it's certainly something that I definitely think it will happen, which will be very bullish for any kind of company in this space. Okay, market cap is very balanced, well, quite balanced, that's nice to see. Regional breakdown, you do get some quite diversified exposure here globally. Also between developed markets and emerging markets. Yeah, so to sum up my take here on this ETF. Long term, I am definitively bullish on this space. Health and wellness are trends that are building momentum, and as you saw with the thematic portfolios that some of them I have created. Well, I have created all of these thematic portfolios, but those who were relevant to this overall theme, they have performed really well, which certainly suggests that there is investor interest. And I think that the biggest selling point is certainly regulations changing and basically all kinds of governmental incentives. That will be very bearish for the bad actors, but very bullish for these companies. But this is something that will happen more longer term. It hasn't really happened yet. We have certainly seen it when it comes to the smoking business, the tobacco industry. But it will be quite the battle, but it is a necessity because many governments have huge bills they have to pay when it comes to public health, and a lot of these diseases and illnesses are preventable. They really are. It is a result of there's like a handful of companies that contribute to the vast majority of the obesity and public health issues. I'm pretty sure you can figure out who they are. So yeah, but they are very powerful. It's very difficult to actually take them on, but I do think it will happen. But always, of course, don't fight the trend. You don't want to do that. Respect the trend, and may the trend be with you.